We are live on the floor of the 2014 Global Real Estate Summit in Chicago, and I'm here with Jeffrey DeBoer, President and CEO of the Real Estate Roundtable, who's about to moderate a much anticipated panel addressing the most pressing policy issues confronting the commercial real estate industry. Jeff, I understand that the Roundtable's top policy priority at the moment is renewal of the Terrorism Risk Insurance Act, also known as TRIA, which is set to expire at the end of this year unless Congress acts to extend it. Now, I've heard you say that expiration would be nothing short of devastating. Why is it such a critical policy issue, and where do you think things will net out in Congress following the recent Senate bill that just renewed TRIA?
Right. Well, look, we do think that it is our number one proactive policy issue right now. We have to get this done by the end of the year. We do think it would be devastating for liquidity issues, for financing, refinancing, construction, but just doing business in America. Much of the conversation this morning with panels and last night at dinner was about the increasing risk and increasing terrorist threats and concerns around the world, and how can we expect businesses to go forward and to operate without the full backing of insurance, and how can we expect lenders to provide financing without insurance on these assets in these business transactions. So we need to get this done. We need Congress to step up. We think over the last many months we've been reasonably successful. We've had a lot of meetings, we've had a lot of testimony, we've had a lot of think tank support, third-party support from groups like the Rand Center, the Wharton Center, and others who have said how critical this issue is. We passed a bill in the Senate with 93 votes from the spectrum, from Ted Cruz to Bernie Sanders approved this bill, and now we're debating whether it should be done in the House of Representatives. And we need to get this done. All we have to do is look back after 9/11 and see what happened without terror insurance. In the 14 months after 9/11, we had about $15 billion worth of transactions that were stalled or completely canceled. President Bush's White House said that was about 300,000 workers, many in the construction trades. So this is a big issue for economic security. It's a big issue for jobs. It's a big issue for any business in America that we get this done. So we're out there calling on everyone to work with Congress. It's fine to debate it, but at the end of the day, we need to get it done. I'm optimistic that we'll get it accomplished, but it won't be easy, and it's going to require all organizations, the Roundtable, the Chamber of Commerce, everyone to contact their member of Congress and urge its support.
Mm-hmm. Beyond TRIA, what are some of the other more pressing policy issues that the Real Estate Roundtable is working to advance? Now, for example, when we spoke a year ago, we talked about tax reform, we talked about the Foreign Investment and Real Property Tax Act, we talked about sustainability issues with energy and the environment infrastructure, we talked about carried interest, we talked about a few other things as well. Other than TRIA, what's really at the top of the list?
Well, look, tax reform is probably on the shelf for the near term, and that puts carried interest and capital gains on the shelf. So we're not highly focused on that right now out in front. We're doing a lot of work behind the scenes. The other item that I think could get done this year might be the Marketplace Fairness Act on internet sales tax, which would sort of level the playing field between brick and mortar and online sellers as far as sales tax. So we're going to try and work that in. It's a long shot, maybe 25%, 30% shot that something could get done on that this year. These other issues are more background, more foundation laying for the future. They're very important, but right now it's TRIA, Market Street Fairness, some regulatory issues that are concerning.
Okay. Now, in DLA Piper's 2014 State of the Market survey, we found that 89% of executives, they told us that they are bullish on their 12-month outlook for the industry. Now, this is the highest level of optimism that we've seen in the 10 years that we've been doing the research. Now, Sam Zell told us this morning that this level of optimism largely is unjustified. I'm interested to get your take, particularly from a policy point of view.
Right. So you want me to either be with Sam Zell or 89% of the respondents here. That's a tough call. Look, I think like everything in life, there are relative bullishness and there's absolute bullishness, right? So relative to where the industry has been the last few years or the economy, I think it's true. People are very upbeat and people are doing transactions, but of course that's relative to where we've been. On an absolute term going forward, do we have the kind of job growth that we need to sustain this? Do we have the kind of demand that we need to sustain an active and successful economy? And I think perhaps, I don't want to speak for Mr. Zell, but maybe that's where he's coming from. Do we know what is going to drive our economy going forward? And I think it's reasonable for people to be, like Sam, to be a little bit suspicious of that. But it's also very reasonable for 89% of the respondents to be very bullish about where we go. I do know that in the survey, one of the major points that respondents pointed out was policy concerns about Washington. What's going to happen on some of these big issues that we've talked about? What's going to happen on interest rates? What would be the environment surrounding a rate increase and so forth? So all of these things, I think it's reasonable, again, to be upbeat and optimistic. That's what our industry is all about. But it's also right to think about concerns and potential headwinds that are out there.
Okay. I want to close with a quick question regarding the Foreign Investment in Real Property Tax Act.
Sure.
Now, this may not be as much of a priority as it was perhaps a year ago,
Yeah.
but in the 2014 study the DLA Piper is publishing today, we found that the majority of executives believe that foreign investors are going to be the most active in the U.S. market in the coming year, followed by pension funds and private equity. Mm-hmm. So does this suggest that the safety of the U.S. commercial real estate market outweighs the burden of the capital gains that are associated with FIRPTA? What's your view on that?
Well, I do think that, look, we're a great country. Everybody wants to invest in America. Everyone wants to live in America. It's the greatest country on earth, right? We have a rule of law. We have a property rights that are better than other nations. So some of these other issues do outweigh the potential tax increase that is associated with U.S. real estate investing. And that's obvious. But, and by the way, it's also obvious in an increasingly risky world and where capital is looking to place itself.
Sure.
But the fact continues that our law, FIRPTA, at its core is disproportionate and not right relative to investment in other nations for foreigners, and it's not right relative to investment in the United States for other industries. So the law still needs to be changed. Some people would suggest that because we have a lot of foreign capital coming into America today, that we don't need FIRPTA reform because we don't need more capital because it might create an asset bubble or something, and perhaps, but that surfeit of capital won't always be here, and we want the right law for the right long-term policy. So we continue to suggest that the current law is out of step with the world, and we'll continue to push and find a way to make these changes.
Again, that was Jeffrey DeBoer, President and CEO of the Real Estate Roundtable. Jeff?
Thank you.
Thank you.
Thank you very much.